Happy Friday, everybody. I hope you had a quiet, enjoyable week. Now, if you did, I know one thing: you were not listening to or watching the news. I'll talk more about that later, but I will say that there's a lot to be said for not paying too much attention to all this right now. This week was especially hard as the Fast and Furious news cycle had a lot of fuel. There was news virtually from every part of the world. There were multiple world leaders on the tape, and of course, that was led by President Trump with his address to a joint session of Congress that everyone keeps calling the State of the Union, which it was not. We had Fed heads out there talking. We had a bunch of important economic data, and we had U.S. jobs data. We even had news overseas as the European Central Bank did its sixth rate cut. So to say the signal was being drowned out by the noise may be the understatement of the week. Please, the signal here is so important. There are facts and there are stories. So much of what is being reported in the news these days is all about the headlines. I know that with all I try to read every day, I read a lot of headlines. The problem with this is that there is a lot of commentary to go along with that headline in most cases. Every day I hear the pundits on TV talk about this feeling and that feeling. Then I hear the adult in the room. You can tell who they are when they stop saying, we think this or that. They start bringing facts to the table. Earnings growth rates, percentage of imports that will be subject to tariffs, and you know all the rest. I ask you to please listen more closely, or not at all, if you choose that. If you only hear the headlines, you're going to miss the signal in the noise. Someone asked me this week if they should watch these videos and why. I'll just say this: less than 10 minutes a week per video, and you get the direct meeting with me up to twice a week. In normal times, I get to see many of you and talk to you on a regular basis. If you have random questions about the investment landscape or even some financial planning ideas, you ask me, and we get to discuss them. We're not in normal times. As I talk about the need to have your hands on the wheel in these markets, even as the autonomous car is coming soon, this is the time that you hear a lot of information. And though much of it may be true, it's important to keep it all in context. That's a part of what these videos are about. I'll continue to make these videos as I have for almost 4 years now, and I hope you get something out of them. Today is March 7th, 2025, and this, of course, is your Friday planning video. Today, I want to dive in a little bit into the why, the real why. Why all of this planning? I've been dealing with financial planning for individuals and small businesses for a long time, and I can tell you that the look ahead, it's paramount. I really tried to find somewhere to refute the following quote came from the rapper Jelly Roll, but that's what I kept finding over and over again, so I'm just going to go with it. He said, the windshield is bigger than the rearview mirror for a reason. What's in front of you is so much more important than what's behind you. The reason I bring this quote to you is that it's all about thinking past the today and understanding that financial planning and overall wealth building often is a long game, not the flash in the pan, not the quick fix, and not the shortcut. I told you last week about Warren Buffett and his snowball idea. Today, I want to give you one example of why we look forward and then some quick notes and some numbers on what we can achieve if we keep our goals in mind and keep ourselves on track. First, why we look forward. We live in an immediate gratification world. I know this is not news to you. As you can imagine, this is not always the best scenario for long-term planning. The why we look ahead comes down to a recent story. Can we afford this was the question. You get that all the time, of course. And as I do, we went through the numbers. The answer, yes, today you can, but it will set you up for longer-term pain in your budget. This came in the form of an approved loan and the immediate gratification of the project. The problem was there's no long-term plan to service the loan and pay it off and still have the cash flow to meet the upcoming needs and wants. It's a hard decision. But as Jerry Rice is quoted as saying, today I will do what others won't, so tomorrow I will do what others can't. Making the hard decision to say no to yourself, to your spouse, to your family, it's not easy, but the alternative is often much worse. Let's look out of the windshield now. What I want to do now is give you some real numbers that line up with what I've been telling you week after week, really year after year. Saving and investing over time can be one way to build significant wealth. It is in your hands. I've spoken a lot about your IRA contributions. Remember, that until April 15th, you are in the sweet spot and you can give 2024 and 2025 contributions as long as you qualify. So let's look at those numbers. I want to give you the numbers for saving and investing starting at age 25, at age 40, and at age 50. I'll start with this. If you want to have $1 million and you assume a pretty high, again, understood, a pretty high 9% expected rate of return, at age 25, you can put $390 per month into your investments and you'll have over $1 million at age 60. If you start at age 40, you'll need to invest $1,630 per month for the same outcome. And if you wait until age 50 to have $1 million by age 60, you're going to need to put $5,500 per month into your investments. Now it seems nice, but let's work it the other way. With an annual expected returns of 10% a year, again, just a round number, but it is high, for 40 years. If you put $50 a month in, that's $600 per year. After 40 years, you'll have a bit over $250,000. How about $100 a month or $1,200 a year? 40 years later, over $500,000. What's that $1,000,000 number again? If you put $200 a month in your investments for 40 years at 10% a year, you will have over $1,000,000. And just to round that off, $300 a year, $3,600, $300 a month, or $3,600 a year. Again, not even your full allowable IRA contribution for 40 years at that 10%, you'll have over $1.5 million. All right, threw a lot of numbers at you. There are many ways to look at this, but let me tell you that the earlier you get started, the longer the power of compounding can work for you. As Warren Buffett said, at age 94, one of the reasons he is one of the richest men in the world is that he's so old and his money's been compounded longer than almost anyone else. Don't really know about that, but that's what he said. So as we head into the weekend, I'm pretty sure it will not be a quiet one on the news wires, but remember what really counts, not reacting to each news story. What really counts is getting a plan in place, executing that plan. Remember, we make changes when necessary. Those changes are not usually driven by your situation. They are usually driven by your situation, not by the markets. So please keep in touch as we continue to do the risk audits on the accounts. Be sure that you are set. We're going to be sure that you are set the way that your plan dictates. For now, enjoy your weekend, and we'll be in touch soon. Have a great day and a great weekend.